Assalamualaikum everyone. Today, my team and I would like to present about the role of MPSAS in public financial reporting in Malaysia. So, first thing first, imagine this. The government collects billions of ringgit every year through tax and grants and spend that money on public service like school, hospital, road and parks. Have you ever wondered how the government keeps track of all this money and how we as citizens can be sure it is being spent responsibly? Before we begin our presentation, let me introduce our team. I am Zafar Mukris and the next person is...
My name is Muhammad Shahmi.
My name is Muhammad Akil.
My name is Muhammad Aswar.
So, Akil will explain about what MPS and its purpose in the public. So let Akil start the presentation. So before we start our presentation, let me pass to Akil to explain what MPSAS is and its purpose in the public.
Today, we will present on the role of MPSAS in public sector financial reporting in Malaysia. Before we begin, let me ask you a question. Have you ever wondered why the government know exactly how much money it has and how it decide where to spend it? The answer lies in financial reporting. Public sector organizations in Malaysia such as ministries, local councils, statutory bodies manage billions of ringgit every year, and without proper reporting, it will be almost impossible to track this money accurately. This is where MPSAS or Malaysian Public Sector Accounting Standards come in. MPSAS provide guidelines on how government entities should record, measure, and report financial information. In simple terms, it ensures that public funds are managed responsibly, record accurately, and report transparently. MPSAS is large based on IPSAS, which stands for International Public Sector Accounting Standards. This alignment with international standards means that Malaysia's financial reporting follows global best practice. By following MPSAS, public sector entities, including ministries, local councils, and statutory bodies, ensure that their financial statements are consistent, reliable, and understandable. Now, I will hand over to my friend to explain the key difference between public sector and private sector accounting.
Thank you, Akil, for the explanation. So now I will explain about the key difference between public and private sector accounting. There are some important differences between public sector accounting and private sector accounting, and I will explain two key differences. The first difference is the objective of financial reporting. In private sector, the main goal is to generate profit for shareholder. In the public sector, however, the main goal is accountability and transparency in the use of public funds. This means that the focus is on how taxpayers' money is spent rather than earning profit. The second difference is the source of funds. Private sector organizations earn money through sales, service, and investments. Public sector organizations, on the other hand, rely mostly on tax, government grants, and other public funding. Because the money comes from citizens, financial reporting must be transparent and accountable. This difference shows why the public sector has specific standards like MPSAS to ensure that public money is used properly. Now, I will hand over to my friend to explain how accurate accounting under MPSAS improve transparency and accountability in government financial reporting.
Thank you, Shahmi. Now, I will explain about accrual accounting and its benefits. One of the key features of MPSAS is accrual accounting. Unlike cash accounting, which records transaction only when money is received or paid, accrual accounting records transaction when they occur. This improves transparency because all financial activities, including liabilities such as loans and pension, and assets such as government building and equipment, are recorded. The public can therefore see the true financial position of government agencies, not just the cash available at any given time. Accrual accounting also enhance accountability because government officers are responsible for recording all financial transactions accurately, and any misuse or mismanagement of funds can be detected more easily during audits. For example, if a government department orders computers for school, accrual accounting ensures that the expense is recorded when the computers are delivered. Even if payment is made next month, this gives a complete and accurate picture of government finance. Next, I will explain about example of public sector organization. An example of a public sector organization in Malaysia is the Kuala Lumpur City Hall or DBKL. DBKL is responsible for providing public service such as maintaining public parks, managing cleaning service, building and maintaining infrastructure, and city planning. MPSAS is relevant to DBKL because it provides guidelines for reporting revenue from tax and government grants, as well as tracking expenses, assets, and liabilities. For example, DBKL used MPSAS to report how much was spent on cleaning service or infrastructure projects, making it clear to citizens how public funds are being used. Without MPSAS, it will be difficult to ensure transparency and accountability in managing taxpayer money.
Thank you, Asfar. To summarize, MPSS provide a standardized framework for public sector financial reporting, ensure that public funds are managed responsibly and reported transparently. Public sector accounting differs from private sector accounting because the objective is accountability rather than profit. The funding comes from tax and government grant rather than sale or investment. Accrued accounting under MPSS improves transparency and accountability by recording all financial events and showing the true financial position of government entities. An organization like DBKL demonstrate how MPSS is applied in practice, ensure that citizens know exactly how public funds are spent. In conclusion, MPSS is essentially for promoting good governance, transparency, and accountability in Malaysia public sector. So, thank you for listening our presentation.